And now we're going to be interviewing Kerem Usenmez, President and CEO of Metallum Resources. Please help me welcome.
Hello.
Thank you so much.
Nice to meet you. Thanks for having me.
Good to see you.
Hi, Ryan.
How are you? Perfect. Get your slides up there. All right. Well, thanks to everybody for joining me for, I think, my last fireside chat of the day here with Kerem from Metallum Resources. Again, thanks everyone for attending and coming out here on a Sunday afternoon. I guess maybe to kick it off, I've been doing the usual 2-3 minute overview just to refresh everybody just on the company and where you're at and everything that's kind of gone on in the last couple of months.
Yeah, absolutely. Metallum Resources is relatively a new company. We started trading last year in April when we acquired this asset, former producing mine at a feasibility study level, advanced project. It's a very high-grade zinc and copper project in Ontario. So former producing mine, so it produced in the 90s. With today's numbers, I would say about $2 billion worth of metals over its 10-year mine life. Now, the remaining ore is about 2 million tons, just over 2 million tons, 18% zinc, 1% copper. Is polymetallic VMS deposit with gold and silver credits to it. So again, with today's numbers, roughly, give or take, it's about, close to, $2 billion worth. And everybody likes gold, so if you convert it into gold, it's about 1 million tons at 13 grams per ton. So it's really high grade. Sure. Any way you look at it. We have a lot of infrastructure close to major, areas as well.
And so how did you come about taking on the asset?
Yeah, that's a great question. So that was one of the things I looked at, like how come we have this? It's great. Everything looks good, clean concentrate, close to production. We published the feasibility study, but we acquired this asset from an Australian company who bought it from a prospector who got it when First Quantum lapsed the claims, basically. Okay. So they did a lot of work that we published a 43-101 feasibility study upon. But it was getting hard for them to manage from Australia, especially when COVID hit. So they were looking for a partner in Canada or a team. So it became an acquisition. So we closed that deal last year. And when we did that, they became a majority of our shareholders. So. And
it's for 100%? Is there underlying royalties? Are there any other encumbrances?
Well, we acquired all the assets that they had, but there's a patented land where the infrastructure is like tailings dam, the shaft, and the road goes right to there. But that, where the tailings dam and the water treatment facility and the mill site, the disturbed ground, is on a patented land that was currently owned by First Quantum. We have an option to acquire it for $0, but there's a closure cost commitments that's being under review right now. So as soon as that's done, or as soon as we're ready to dewater the underground workings, we're very, very close to that, we will exercise the option and own 100% of the project, basically.
Given that it was a past producer, do you have any legacy environmental issues to deal with?
No, there's nothing really. When they mined it, they did a good job. Okay. And the good thing is the ore the deposit is pretty clean. There's no mercury, there's no antimony or any other heavy metals that would cause problems. And zinc is non-toxic, so that makes it easy. And the concentrate is clean as well.
Okay. And then you mentioned, I think, that you recently had a feasibility study that had come out. I think there had been some economic studies done on the project previously. What's kind of changed since you've acquired it in terms of what work have you done? What are the changes in the updated feasibility study? Yeah,
so the cost went up significantly. However, it's still the metrics are very, very good. We actually benefit from having this really, really high grade, or like just to give a context for zinc. Zinc is really underlooked it's not under the spotlight, let's put it this way, in terms of base metals. But average grade, it used to be around 2006, it used to be around 5%. Nowadays on development projects is around 3%. Our project is 18%. So we benefit from that, even though the cost has gone up. but also having all the infrastructure in place. Like our development cost is really, really low because all the underground development is there right to the ore body. So despite the fact that the costs are going up, have gone up, with 10-15% contingency, we're looking at all-in sustaining costs around 41 cents US. So now it's 1.6.
Yep.
You know, it's 4 times. So even though there will be fluctuations in cost as well as the zinc price, we will still be in good shape.
And in terms of, can you maybe talk about a little bit of the existing infrastructure that's in place? I'm assuming that probably would have an impact on your initial Capex as well.
Absolutely. The initial Capex is, in relative terms, pretty low, 116 US million we're looking at to reopen the mine. And that assumes that all the equipment will be purchased brand new, which we will not do that. I mean, we're looking at used mill right now. That will be the major cost. And we're looking at some other alternative ways to cut that cost. But the costs are going up, so give or take, it's going to be that. The infrastructure in place is the tailings dam, operational and with capacity. The water treatment facility is in operation. I was there just before PDAC last week on site looking at stuff. The road right to the mine site, which is 20 kilometers from main Trans-Canada Highway, 27 kilometers from the railway station, which historically was used to ship the concentrate from Schreiber, and underground development, 16 kilometers of underground development ready to go. It's just flooded right now. Plus there's transformer on site and the power lines come right to the site. So very minimal work to get it up and going.
So what would the bulk of that Capex be?
Yeah,
Like,
mill,
putting
clean up and stuff. Underground rehab is kind of going to be major, but the decline. So we looked at rehabbing the shaft, putting a head frame versus driving a decline, which is a ramp to break through the underground workings. I've looked at it a few times. Still, decline is the best option. So that is going to be the majority. But we're talking to a lot of very creative ways to do that with financing. So I think we're in good shape that way too.
I guess you've got a pretty fresh feasibility study out, but given what's gone on at whether it's Magino or Cote and all the inflation going on, does that keep you up at night at all, or what's your level of confidence in that Capex number? I
mean, in this environment, you would look at transportation cost should be going down, okay, given the zinc price and the whatever is happening, but that's not going down. In the short term, I think it's going to be high, which is relatively good for us because we are still probably 2 years away from having the first ore shipped or the concentrate shipped. Well, hopefully shorter than that. It's just a matter of the final permits to be granted, really. So.
Well, it could segue to my next question of where you are in the permitting process and what's left to do on that side of things.
Yeah, so we have a lot of surface permits ready. The sewage works, ECA, surface exploration. We're just actively working on to get the underground workings dewatered. So we're applying for the dewatering permits and started the process partially for the full production permit in tandem. So we're looking at getting the dewatering permit this fall and start the dewatering immediately. And that'll give us 2 things: get the dewatering rehab done and the access. So we can start the access on the patented land, going right into the ore or the underground workings. In the meantime, advancing towards the full production permit. So by the time we have the full production permit, everything will be ready to go.
Okay.
Which should happen next year. But, give or take, we're targeting 2024 right now.
So good on the permitting side, and then I guess agreements with First Nations that you have to consult with, and is there anything, I guess, on either side of those that's been a bit of a holdup, or is everything just kind of...
The holdup is on the ministries, really.
Okay.
It's not on our hands. We're doing everything we can. We're trying to lobby politicians and everything else, but the First Nations have been super supportive. The chief was actually supporting me at the PDAC with us. We met with the federal, MPs, ministers, and even the permitting people that we're dealing with locally in the Thunder Bay office. We met together with them, and I think it's going well, that side of things. It's just a matter of timing on the ministry side, not in our hands, really.
Got it, okay.
Because we've done all the work, like environmental stuff or all the studies, we've done it all, so.
Okay.
on our side.
Yeah, and you kind of touched on this a little bit in going through the environmental side of things, but on, I guess, kind of switching back to the technical side and looking at metallurgy, how does that look in terms of a flow sheet? When you're looking to go, acquire a mill, is it pretty straightforward? Are there any complicated elements to deal with, or?
It is pretty straightforward. That was one of the first things I looked at, because the more I was looking into the data when I stepped onto this role, like, this is good. My background is operations and rock mechanics, and that was good. So I'm like, where is the catch? So I called my friend, he's an advisor now, Mark Cruz. I said, can you look at the data on the metallurgy? So he said, it's very clean. And the good thing that we have is there is a real good historic data. This is proven, right? This is produced before, so it's pretty clean concentrate. And the only thing I would say limiting us is high iron content. So it's not suitable for every smelter, but hey, that's still good. I mean, we're getting a lot of interest from metal traders, especially lately. They're calling me constantly, so they might support us financially as well. We'll see how the talks go, but there's a big interest because it's clean. The concentrate is clean.
Right, okay. And I mean, you kind of touched on this a little bit before as well, in saying that, there's, looking at all the gold companies, people are, obviously very familiar with gold exploration and all that. Zinc maybe a little bit less so. How are you finding the zinc market these days?
Well, the zinc price has been going up. Like this year, it almost hit all-time highs. And it has been over $1.6. Our study was done at 1.2 as a long term, and we never even expected it to be 1.4 really. Like last year it hit, and it's been staying up. We have also copper, 1% copper. I mean, the thing is, zinc is required for everything. All these, infrastructure and automotive, historically, 65% of its use, which was giving us hope, right, previously, because all the stimulus packages post-COVID, even before COVID, it was supposed to go up. That was the projections. Now, with the electrification, the green economy that's exploding around the world, everybody's focused on, more, highlighted metals or elements.
Right.
However, zinc is going to be the prime metal that's going to be needed for the infrastructure piece. When I look at wind turbines, inside it's copper, outside it's coated with zinc.
Right.
And not only that, but there's also some really good, very exciting developments are happening in the zinc battery sector. Zinc ion and zinc air batteries are getting traction because they can store cheaply. They don't need any permits to transport. They don't combust. And they're non-toxic. So actually, state of New York converted their energy storage into zinc air batteries.
Interesting, okay.
So it's exciting times for zinc, but hopefully we can. And also, the other thing is, by 2025, a lot of major zinc mines are going to come into closure. And there's not enough development. Because of that reason, there hasn't been a lot of investments going into zinc exploration. So, I mean, we're no way going to fill the gap, but it's good timing for us to be in production within 2 years.
Good sector overview.
Yeah.
And then I guess just maybe one of the challenges for companies at your stage where you're kind of, feasibility's out and all that, you're kind of shifting a little bit more into development. Do you still have exploration or anything else kind of ongoing in tandem? Like, how do you keep it, I guess, newsy and exciting as you go through that kind of quieter period?
That is definitely challenging. As we start construction, we might do some more work. Like, we're targeting to do some IP because IP was never done on this property. It was found by EM, and it has been successful. We want to fine-tune some targets. There's a lot of targets. Believe it or not, there are greenfield targets around the vicinity. But also, this remaining ore body is not fully understood. So there's some exploration potential there. We don't want to do it from surface. As soon as we're underground, we'll probably continue, checking the extent of it. So hopefully we can expand the mine life before even starting production. So
that makes sense. And then I guess the last question as we wrap up that I've been asking everyone is just, given all the exploration companies out there, what's the differentiating factor for Metallum? Why put an investment dollar into that company as opposed to the other ones that are out there?
There are really good, exciting projects out there. I mean, zinc is overlooked, but like I said, it's very high-grade zinc, very close to production, clean concentrate, great location, and a lot of infrastructure there. So it's pretty much de-risked already and at a really good time. So, and the equities are low, so I would say it's a good opportunity.
The undervalued line?
Absolutely. Always.
Perfect. Perfect. All right, that's all I had. I think we got about 3 minutes here, so I guess I get to keep my job, keeping everyone on track.
Do we have any questions from the audience for Kerem? Of course, Terry. Gabe, you should just sit right beside him with the mic, I think.
Sorry. And thanks for letting me know doing this in a private conversation. Kerem, I'm glad you mentioned about the high iron content. What is the iron content again in the cons?
It's between 8 and 12. Historically, it was just under 10, but with the met test work that we did, it goes up to 12. So 8 to 12, I think that's where you get the limitation at 10. So you just want to be conservative, so we go with the higher number.
I understand. As you said earlier, that people are calling you, traders are calling you with respect to the possibility of trading whatever, but they're also financing projects. And we've seen some of it in very obscure places, and some of their investments actually didn't work out, so they're short of zinc in some places. Are you of the size in terms of production, do you think, that they will make a deal with you in terms of financing some and also take the cons?
I think so. Sorry.
And one of the smelters in the area, I mean, in Quebec, is always short of feed. So how does that work out? Thanks.
That's right. The Quebec one is definitely a target for us, and it fits very well in the metallurgy or the composition of it. But it's going to come down to numbers. We are talking 6 metal traders right now in very advanced stages. I actually got one term sheet, the other one is on the way, and we're going to see, which one makes sense with the transportation and all that stuff. But not only that, we're also in talks with debt providers, as well as big equity. Some partners might be coming in, and some of them are mine builders. So I'm favoring that as well on the equity side, because they will have skin in the game. They will be more incentivized to get the job done. So we're looking at all these right now. It's going to probably be a combination of all these 3. So that would be the ideal. We'll see. Yeah.
So when is the decision time this year?
Yes. Yeah, definitely.
Okay, fair enough. Thank you.
Ryan, Kerem, thank you very much.
Thank
Thanks.
you. Thank you.
Right off with you. Thanks.